Good day to everyone. I'm pleased to introduce the talented individual who comprise our team for the assignment. First, we have Sharif Shakira Al-Hadi binti Syed Abdullah. Second, Nur Hidayah binti Oman. Myself is Siti Nasir binti Ahmad Moini. And last but not least, we have Nur Hidayah Husna binti Abdurrahim. Today, we explain on how we select the companies and analyze their financial data. First, we carefully choose companies based on specific criteria and the availability of financial information. We then obtain the latest annual report from Bursa Malaysia to gather detailed financial data. Starting with Padini Holding Berhad, we describe its business activity and the finance performance. Similarly, we introduce Kamda Group and Berhad, highlighting what it does and its financial status. Next, we analyze important financial ratio to see how both companies' financial performance has changed over the time. Using the data collected, we compare Padini Holding Berhad and Kamda Group and Berhad to identify their strengths and weaknesses based on their financial ratio result. Finally, we summarize our finding to our analysis. Structure approach helps us to gain insight into both company, financial health, and performance.
Padini Holdings Berhad is a well-known retail company headquartered in Malaysia. Established in 1971, the company has earned a stellar reputation and has become a household name in the retail industry. Padini Holdings Berhad offers a wide range of fashion products, including clothing and accessories under its various brands such as Padini, Vinci, C, P&Co, and more. The company has built a loyal customer base both locally and internationally by focusing on quality, affordability, and contemporary fashion trends. Padini is known for its unwavering commitment to providing high-quality fashion options that are not only trendy but also affordable for a wide range of customers. The company has carved out a prominent position in the retail sector due to its dedication to offering a diverse range of clothing and accessories across its multiple well-recognized brands. This approach has helped Padini establish a strong market presence and build a loyal customer base who appreciate the combination of style, quality, and affordability that the company consistently delivers. Kamda Group Berhad has been established as a textile, furnishing, and garment department store in Malaysia since 1972, achieving a dominant position in the retail industry. The company has 24 stores nationwide. Kamda is recognized for its extensive range of textile and furnishing fabrics due to a passion for providing the latest designs and materials to its customers. The company specializes in home furnishing fabrics for curtains, upholstery, and bedding, as well as fabrics for clothing. Additionally, Kamda offers ready-to-wear fashion for men, women, and children, including traditional wear, school uniforms, corporate, and casual wear. Kamda has become a part of nation history, a fact of which the company is very proud. Kamda's departmental stores have been well known for generations throughout the country. Kamda Group Berhad has been a public listed company on Bursa Malaysia, the Malaysian Stock Exchange, since 2005. From traditional batik fabrics with motif to songket and jacquard for ministries to colorful cushion covers, towels, and bedding for hotels and events, and ready-made uniforms to custom-made ones for schools and higher education institutions and students, and brand for both hotels and hospitals. The Kamda brand represents quality of service, history, and value for money. The public perceives the company has a trustworthy value for money store with a difference. The Kamda logo with its distinctive typeface and turquoise with black corporate colors fostering an environmentally aware, clean, fresh, and new image is instantly recognizable throughout Malaysia.
Let's look at Padini and Kamda financial trend from 2019 to 2023 based on the net working capital. Padini consistently had more money in current asset than it owned in short-term debts. This suggests they are ready for immediate expenses and could grow. Similarly, Kamda also had more current asset than debts during this time. This show they are already prepared for short-term expenses and growth. When comparing their net working capital result, Padini consistently had much more than Kamda throughout this year. Padini stayed high and grew steadily while Kamda went up and down. These differences could be because of Padini managed their money and bills better. Kamda changes might be due to how they handle their money and bills at different times. In summary, both Padini and Kamda shows they are ready for short-term costs and growth. Now let's see at Padini and Kamda current ratio changes over the past 5 years. Padini consistently had a current ratio above 1, showing they could cover short-term debts well. Overall, Padini maintains strong financial liquidity. Kamda also kept a current ratio above 1 throughout this year. This indicates Kamda managed short-term debts effectively. Comparing them, Padini generally had higher ratio than Kamda each year. For example, in 2029, Padini ratio was 3.92 compared to Kamda 2.85, likely due to more asset compared to debts. In 2022, Padini ratio fell to 3.62 while Kamda rose to 5.00, surpassing Padini due to effective management. In 2023, Padini improved to 4.47 while Kamda stays strong at 4.61. Both maintain good levels. In summary, both Padini and Kamda have strong financial health. Padini generally show better short-term debt coverage, reflecting their efficient financial management. Let's see how Padini and Kamda quick ratio changes over the past 5 years. Padini quick ratio was consistently above 2 in 2019 and 2020. It peaked at 3.92 in 2021, showing strong ability to cover short-term debts. However, its slight drop to 2.72 by 2023. Overall, Padini had a strong ability to cover short-term liabilities. Meanwhile, Kamda had challenges with a quick ratio below 1 from 2019 to 2021. In 2021, it improved to 1.21. By 2023, it decreased slightly to 0.98. Comparing them, Padini had much more higher quick ratio of 2.58 in 2019 compared to Kamda 0.37. In 2021, Padini ratio was 3.92 while Kamda was 0.32. In 2023, Padini ratio was 2.72, which is still strong, while Kamda was at 0.98, showing a slight decrease. Padini higher quick ratio shows better management of available cash, while Kamda lower ratio suggests challenges in managing short-term debts.
The gross profit margin ratio of Padini Company exhibited a consistent upward trend from 2019 to 2020, followed by a decline in 2021 before rebounding in 2022 and exceeding the 2020 level in 2023. On the other hand, Kamda's gross profit margin ratio portrayed significant instability from 2019 to 2023, culminating in a sharp increase to 100% in 2023. When comparing the gross profit margins of Padini and Kamda over the years, we can see some interesting trends. For Padini, the gross profit margin has been consistently high, starting in 2019 and reaching 64.99% in 2023. On the other hand, Kamda's gross profit margin has been more unstable starting in 2019 to 2022 and then significantly increasing to 100% in 2023. There are several reasons why this may have occurred. Firstly, Padini's higher gross profit margins could be attributed to strong brand recognition, efficient operations, and effective cost management. On the other hand, Kamda's inconsistent gross profit margins could be influenced by factors such as changes in pricing strategies, inventory management, and cost structures. It's important to note that the sudden spike in Kamda's gross profit margin to 100% in 2023 seems unusual and may require further investigation. From 2019 to 2023, Padini's company's net profit margin fluctuated, showing a decrease in 2020 and an improvement in 2022 and 2023. Kamda's company net profit margin also varied significantly with losses from 2020 to 2021 and a major decline in 2023. The net profit margin for Padini has shown fluctuations over the years, with 2019 and 2020 having relatively higher margins compared to 2021. The margin then saw a significant increase in 2022 and 2023. This variability could be attributed to factors such as fluctuations in costs, changes in sales volume, or shifts in the pricing strategy. On the other hand, Kamda has experienced negative profit margins in 2020, 2021, and 2023. This signifies that the company expenses and costs might have outweighed its revenues during these years, leading to unprofitability. The positive net profit margin in 2019 and 2022 indicates that the company was able to generate profits in those years. But the decline in 2022 suggests a potential change in its cost structure or revenue generation. The reasons for the fluctuations in net profit margins for both companies may include changes in operating expenses, the cost of goods sold, competitions, economic conditions, and other external factors impacting sales and profitability. The operating profit margin ratio of Padini Company declined from 2019 to 2021, but improved significantly in 2022 and 2023, surpassing the 2019 level. This suggests a positive turnaround in operational performance and profitability during these years. From 2019 to 2023, Kamda's company's operating profit margin showed fluctuation with a temporary recovery in 2022 but a drop in 2023, indicating significant operational challenges and losses. When comparing Padini and Kamda's operating profit margins over the years, it's clear that Padini consistently maintains a significantly higher margin, likely due to better cost control, higher sales, and overall operational efficiency. In 2020, Padini's margin declined, possibly due to increased expenses or a drop in sales, while Kamda had a negative margin, indicating higher expenses than gross profit. In 2021, both companies experienced a further decrease in margins, likely due to economic factors. In 2022, Padini's margin rebounded, while Kamda's improved to 7.97%. In 2023, Padini's margin increased, indicating sustained improvement, whereas Kamda's decreased significantly. This comparison suggests that Padini consistently outperforms Kamda in terms of operating profit margins. From 2019 to 2023, Padini Company experienced fluctuating return on assets, with a significant decline in 2020 but signs of improvement in 2022 and 2023. Kamdar's company's return on assets fluctuated, turning negative in 2020, showing recovery in 2022 but declining again in 2023. Overall, both companies need consistent asset management and operational improvements for stable return on assets. When comparing the returns on assets of Padini and Kamdar over the years, we can observe significant variations in their performance. Padini showed strong profitability in 2019 but experienced declines in 2020 and 2021 before rebounding in 2022 and 2023. On the other hand, Kamdar consistently had a lower return on assets than Padini, with negative ROA in 2020 and 2021. Although it showed improvement in 2022, the return on assets declined again in 2023. These fluctuations in return on assets could be due to factors such as revenue changes, cost management, and assets utilization. From 2019 to 2023, both Padini and Kamdar companies experienced fluctuating return on equity (ROE) ratios, indicating varying levels of profitability and efficiency in generating returns for shareholders. Padini's ROE showed initial strength in 2019 but fluctuated thereafter, while Kamdar's ROE fluctuated from marginally positive to negative, with a brief improvement in 2022. When comparing the return on equity (ROE) of Padini and Kamdar over the years, we can see a significant difference in their performance. For Padini, the ROE fluctuated over the years with a high of 21.63 in 2019, followed by a decline in 2020 and 2021, and then an increase again in 2022 and 2023. This fluctuation may be attributed to changes in the company's net income and shareholders' equity during these years. For instance, the decrease in ROE in 2020 and 2021 could be due to a decrease in net income or an increase in shareholder equity. On the other hand, Kamdar's ROE has been notably lower with a negative values in 2020 and 2021. This indicates that the company had a net loss during these years, resulting in a negative ROE. However, there was a marked improvement in 2022 and 2023, where the ROE turned positive. In summary, the differences in ROE between Padini and Kamdar can be attributed to variations in their financial performance, including net income and shareholder equity over the years.
Assalamualaikum warahmatullahi wabarakatuh. My name is Noy Devsuna Rahim, and I will explain about the trend analysis and comparative analysis for 6 activities ratio between Padini and Kamdar. First, I will start with total asset turnover. In 2019, Padini's total asset turnover was strong but dropped significantly in 2020 and 2021, which is 0.58 and 0.50 respectively, indicating challenges in asset use. By 2033, it evolved to 0.66, showing improvement likely from operational changes. Kamdar's asset turnover was consistently lower, with a sharp decline in 2021, which is 0.31, continuing through 2033, 0.10, highlighting ongoing asset efficiency issues. Padini generally use asset more effectively than Kamdar, but both need strategies to enhance asset utilization for better sales and financial health. Next, account receivable turnovers. Padini's account receivable turnover fluctuated over the years, slowing in 2020 with 16.62 and 2031, 13.43 due to economic challenges, but improving in 2023 with 16.74 with better payment process. Kamdar experienced larger swing with higher account receivable turnover, peaking in 2031, which is 65.39, but declining in 2022 with 57.62 and 2033 42.81, indicating challenges in maintaining first collection. Overall, Kamdar consistently showed faster payment collection compared to Padini, reflecting better credit management and possibly more timely customer payment. Average collection period. Padini's average collection period varied each year, slowing in 2020 with 21.65 days and peaking in 2021 with 26.79 days due to economic factors or payment issues, but improving to 21.49 days in 2023 with tighter credit rules. Kamdar consistently maintained a lower average collection period than Padini, indicating faster collection such as 5.51 days in 2021, reflecting effective credit management and prompt customer payment. Lower average collection period for Kamdar suggests efficient cash flow management and readiness for daily operation. Fourth, average payment period. Padini's average payment period varied annually, with longer times in 2021 with 10.97 days and 2022 with 10.81 days, potentially for improved cash payment or negotiating longer terms, but decreasing to 4.37 days in 2023, indicating faster payment possibly from enhanced cash flow or operational efficiency. Kamda typically had a longer average payment period compared to Padini, suggesting different strategies for cash management, supplies relations, or industry norms. Overall, Padini's quicker payment practice fosters strong supplier relationships, potential discounts, and reliable cash flow for daily operations. Okay, next, inventory turnover. Padini's inventory turnover fluctuates annually, slowing from 2019 with 3.91 times to 2021, 2.92 times, possibly due to sale challenges or excess inventory. Improvement in 2022 with 5.91 times suggests better planning, but the decline in 2023 with 2.54 times indicate potential sales or inventory issues. Kamda faced fluctuation with negative values in recent years, possibly due to reporting errors or unusual circumstances. Overall, Padini consistently showed higher and positive turnover compared to Kamda, reflecting superior inventory management and potentially lower inventory costs. Higher turnover reduces the risk of aging inventory and supports better profitability through efficient inventory control. The last activity ratios is fixed asset turnover. Padini consistently shows higher fixed asset turnover than Kamda from 2019 to 2023, indicating better efficiency in using assets like stores and equipment to generate sale. Padini's fixed asset turnover increased from 8.21 in 2019 to 12.80 in 2023, reflecting improved operational management and strategic investment. In contrast, Kamda fixed asset turnover decreased from 0.98 to 0.28 over the same period, suggesting challenges in asset efficiency and possible inadequate investment in modernization. Overall, Padini's higher fixed asset turnover underscore their superior ability to generate revenue from fixed asset compared to Kamda. Thank you.
The debt ratio compares how much money a company owes to what it owns, helping us understand financial risk. From 2019 to 2023, Padini and Kamda's debt ratios show distinct trends. Padini's debt ratio was 22.52% in 2019, increased to 45.20% in 2020, dropped to 37.08% in 2021, and remained around 40% afterward. This suggests Padini borrowed more in 2020, likely for expansion or investment, and then managed its debt in subsequent years. Kamda's debt ratio started high at 71.17% in 2019 but steadily decreased to 21.43% by 2023. This indicates Kamda focused on reducing debt and improving financial stability over these years. The debt-to-equity ratio shows how companies finance their operations and growth. From 2019 to 2023, Padini and Kamda handled their finances differently. Padini's ratio rose from 29.07% in 2019 to 82.49% in 2020, indicating increased borrowing, possibly for expansion. By 2023, it dropped to 60.19%, suggesting debt repayment or higher earning retention. Kamda's ratio decreased from 44.63% in 2019 to 27.27% in 2023, indicating reduced debt usage and increased financial stability. These trends show Padini's fluctuating borrowing and Kamda's careful debt management. Investors can use this ratio to assess each company's financial health and risk management. The times interest earning ratio shows if companies can pay interest with their earning before taxes and interest. Comparing Padini and Kamda from 2019 to 2023 reveals their financial handling. Padini's ratio was strong in 2019 at 132.80 times but dropped to 4.14 times in 2020 and 3.52 times in 2021, indicating struggles. It improved to 10.67 times in 2022 and 13.72 times in 2023, suggesting better earnings or strategy. Kamda had a low ratio of 0.33 in 2019 with negative ratios in 2020, 2021, and 2023, showing they couldn't cover interest. Their ratio improved to 1.95 times in 2022 but remained low. Padini's early strains likely came from strong earnings with drops in 2020 to 2021 due to issues and improvements in 2022 to 2023. Kamda's consistently low ratios indicate ongoing financial problems.
After conducting a thorough trend analysis and comparative analysis of the financial performance of Padini and Kamda from 2019 to 2023, several key findings have emerged. Firstly, both Padini and Kamda have exhibited consistent revenue growth over the years, with Padini experiencing slightly higher revenue growth compared to Kamda. This indicates that both companies have been successful in capturing market share and increasing their sales. Secondly, profitability analysis reveals that Padini has maintained a more stable and higher profit margin compared to Kamda throughout the period under consideration.
This suggests that Padini may have a more efficient cost structure and better pricing strategies. Furthermore, liquidity analysis indicates that both companies have managed their short-term obligations effectively, with Padini demonstrating stronger liquidity positions compared to Kamdar. In conclusion, while both Padini and Kamdar have shown positive growth and performance trends, Padini appears to have outperformed Kamdar in terms of revenue growth, profitability, and liquidity. However, it is important to note that a comprehensive qualitative analysis, industry dynamics, and other external factors should also be considered when making investment or business decisions.